Happy Friday, Anthony Special here with Special Analysis. Welcome to another edition of Unedited and On the Edge of the Market. Today we're going to circle back to a stock that we have previously discussed because I want to talk about the opportunity at hand. And this is kind of what happens. We watch a stock, we analyze it, we wait for it to set up. When it does set up, that's when we execute. And guys, that's part of the process here. It's about being patient. It's about understanding that we take a chart, we break it into analysis, we break it into a trade plan, and then we implement it into action. A lot of traders get caught up in the hype of, I want to trade. I get it, but as time goes on, as you do this for a while, you will that anxiety and anxiousness will dissipate, and you will then find that patience will become your very, very best friend, because with patience will become consistency, and that consistency will bring discipline, and that discipline will bring profit. So you really want to just give your body a chance, give your mind a chance, give your emotions a chance to kind of just digest what's going on in the market, and then you can then put that into action in a calm, conservative manner, and that is exactly how you do this over the long period. Again, trading is a marathon, not a sprint. It's something we can do for a very, very, very long time, as long as we don't hurt ourselves along the way. So, we had spoken previously about Netflix, and that's what we're going to look at today. And the reason we're going to look at it today is because, we analyzed that this company, during its most recent sell-off, had basically tested a key area of support. And we identified that key area of support by simply drawing two lines. We drew this channel right here, this bottom, followed by this top. We saw that price penetrated the top and literally sat at the close of this candle on this bottom channel line. Now, one of two things was going to happen. Price was going to reverse and go higher, or price was going to continue and go lower. So what we really like to look for is what we call a weekly settlement. And a weekly settlement is exactly what it sounds like. At the end of the week, where does the price settle? So as long as we can get a 1+% confirmation, meaning that we see the price settle 1% beyond an area of support or resistance, that is really for us a good confirmation. It's very obvious that the trajectory of the stock is bearish. It's down. That's undeniable. We can see that after we peaked, it's just been an absolute waterfall or dumpster fire, whatever you want to call it. But where do we strategically take an entry, limit our risk, and look to book our reward? And that's what we're going to talk about today real quick. So I'm going to just zoom in here so we kind of get a little closer feel. I'm going to zoom this out, center this up a little bit so we can see it. So what am I looking for? 1% confirmation. I'm working off of this center line. I take my measuring tool. You can see I have about 11 or 12%. So that tells me that the price has more than followed through. I can, as a trader, expect that price will continue to follow through and test the next key area of support, which would be indicated down in this area. Now, realizing that on a percentage basis, it's not a huge move. But I don't need it to be in order to make money. I just need it to be a significant enough move that over a period of time, I can get a good return on my investment. And with that, I'll be happy. I'll take my return on investment, and then I will go put my money to work somewhere else. That's the name of the game. Just repeat. Look for the conservative setups, find them, be patient. So we know that we have confirmation. How are we going to play this? So we know that our shorting area is going to be somewhere in this vicinity, wherever the week closes. We're going to wait to see the week close. We know our stop is going to be right here, where we saw that support and resistance changed hands. And our target's going to be right here at this area of support, this next area, this channel here. So I personally would probably not short the stock itself, although that's a viable option if you wish to. I would typically go to the options market, and for safety reasons, for conservative reasons, I would buy a put. What happens when you buy a put is you're betting on the price of something to go down, but you're capping your risk at the premium in which you paid for that put option. So it's a win-win, meaning you can only lose as much as you bet on buying the option. And if the trade does what you anticipate it to, you can count on some good leverage in the options market to really do fairly well. So I'm going to show you what that looks like. I'm going to open up an options chart here as well, and we'll take a quick peek at what this looks like here. So this is a simple options chain. This is nothing fancy. This is think or swim as far as the platform's concerned, and I simply searched for Netflix. So I'm thinking that the July call or put options, the July contract is really the timing that I want to be interested in. Gives me plenty of time for this to transpire without being concerned about theta, which is called time decay, which is when you reach expiration, the value of your option starts to deteriorate. So we kind of want to get out of it before that happens. So we want to give ourselves enough of a buffer that we can do that. And the the put option rather that I selected that I thought was probably the right one to buy is slightly out of the money. It's the 155 puts. And you could buy that somewhere between 650 and 585 and 680. So you gotta split that. That probably puts you in the mid $6 area, maybe 630-ish. You can see the mid is 627. So you could buy this today, this put option for 627, and as we get closer and closer to the price becoming what we call in the money, the value of this could rise fairly quickly, as long as the price of Netflix continues to fall. You can see right now the call option, the put option that's in the money, is worth $18.66, essentially a little short of 3 times the amount of what we would be paying for this put option today. So if in fact this trade does work as we anticipate it to, we buy this put option at $6.27 roughly. We give it a time to transpire. As price approaches our target, this put option could be worth approximately 3 times what we paid for it. Now if it continues to sell right through it and happens just that fast, it could be worth much, much more. What's going to transpire? I can't give you that information until it happens, but all I can tell you is what I can anticipate. And anticipating Netflix to continue to sell off could present a very, very rewarding opportunity, and this is the particular way in which I would encounter this. So the greatest amount of money I could possibly lose is what I chose to pay for my put options, meaning that's my entire risk, and my entire reward from what I can evaluate at the moment could be a 3x return on my money, which would make me extraordinarily happy. So guys, that's kind of it for today. That's kind of it for the week. I kind of want to wrap up the week with an example of how we can take a simple trade idea and mold it into a profitable options trade. I mean, this is the least expensive and most conservative and safest way for you to place a bet. Again, you can only lose the premium you paid for the call or put option, which really puts you in the driver's seat when it comes to controlling risk. And for me, that's the most important thing when I'm introducing traders to trading. How do we control the risk so that if the trade doesn't work out, the trader is not deterred from taking the next trade when the next opportunity comes along, because you want to be consistent. And if you get scared or deterred because you took a loss, you don't take the next trade, and the next trade's a winner, you're going to be very upset with yourself. So for me, when I introduce somebody to trading, I want them to feel comfortable. I want them to take low risk, high probability trades. I want them to use risk management, at the forefront of their thought process so that they can be successful in the long run. Because again, trading is a marathon, not a sprint. So I will leave you with that for this week. I hope you have a wonderful weekend. I hope you had a great week. Guys, if you enjoy these videos, if you find them valuable, if you find this content useful, if you've put some of it to work, I hope that you've been successful. I'd love to hear about it. Please feel free to leave me a comment below or send me an email, info@specialanalysis.com. And as always, if you could like, share, and subscribe, it would be greatly, greatly appreciated. And I will talk to you guys Monday. Enjoy your weekend.